right. Very good morning, everyone. I hope you guys are doing amazing. I hope you guys had an amazing week because amazing Monday. Yeah, we can do it already. An amazing Monday. Yeah, and I hope you guys are able to take a profit out of it. And definitely, don't forget to give God praise and thanks for keeping you through that night and bring it to a Tuesday. Now, as we all know, today is the much anticipated non-farm payrolls that, unlike the previous ones that we are much acquainted to, this one is happening on a Tuesday. Last time we had it on a Thursday. And as we once said, this is all due to the previous government shutdown. That happened to be the longest in the US All-American history as well, went over 40 days. And that's why we are having these NFPs on such days, trying to cover up for those two events that we didn't actually have with non-farm payrolls. So we do have the NFP coming out today. So you want to be ready for that. Make sure you manage your risk, or make sure you're going to manage your risks very, very accordingly. For those of you who don't feel like you're meant for the non-farm payrolls, it's very okay to actually stay out of them. It doesn't really hurt. Wait for the next best opportunity. I mean, the market is still running, right? Even after Christmas, the market will be back. So you can as well take that decision to stay behind and definitely watch what the non-farm payrolls might have to offer, and even probably use it for like back testing or something of the sort. For those of you that might want to. Other than that, I would like to pass this across. Very important risk disclaimer. Kindly, this is not financial advice, and please do your due diligence whenever you're about to take a trade or you're about to take up any trading opportunities. That's very, very important to always do whenever you're going to take up some trades. Good morning, Emma Trades. I still don't know why you're using my same brand. I don't know why, but anyway, we shall figure it out. Good morning to you. Thanks for tuning in as well. So, of course, we're going to start by looking at our trading calendar. But before I go any further, I'd like to remind you guys that in case you're looking for where you can always learn trading, or you have a couple people who are interested in learning trading, you can always send them to the FXPesa classes. We do have online and physical classes, and the links for all of them are in the description. So you can order link in bio on our social media platform. So you can go ahead and forward them there so they can be able to sign up. So looking at our calendar today, I've already selected only high impact news events because we have quite a lot of them. And I'm going to pay more attention to, of course, the ones that we are much anticipated to. But as you can see, we did have employment change for the pound that hit its all-time high in 5 years. We have the climate count change. So these are a couple of the events that are coming up in the next few hours, but these are basically, this is Germany. So power trading is like DAX 40 or the German 40 index. You might want to watch out for these news events. In the next 30 minutes, this is what you want to watch out for. We have the HCOB composite PMI affecting the Euro manufacturing. So power trading Euro pairs, you might want to watch out for this at 12 to the dot. We also have the manufacturing PMI for the Euro. So then we have the S&P Global Manufacturing PMI for the pound. We did have already their employment rate change that came in earlier on, I think a few minutes back. Then we do have our retail sales coming for the US. This is something you want to pay so much attention to. And I want you to notice something very peculiar. We have retail sales coming out at 4:30 p.m. East African time. We do have retail sales again, control group. We have average hourly earnings all coming in at 4:30. Just a second. All coming at 4:30 p.m. And then we shall also have the non-farm payrolls that will be coming in at 4:30 p.m. or the NFP as we like calling it. All right, good morning, Clevin, your USD. Good morning, Limo as well. All right, we have the non-farm payrolls where all our eyes will be. So yeah, there's a very short note on it. The non-farm payroll release presents the number of new jobs created in the US economy during the previous month in all non-agricultural businesses, and it's released by the US Bureau of Labor Statistics, where we had no previous non-farm payrolls, because this US Bureau of Labor Statistics is funded by the federal government, and during the shutdown, all of these workers were put on a forced leave. It's why we had no non-farm payrolls for the months of September and October, respectively, right? So monthly changes in payrolls can be extremely volatile. While a low reading also can be extremely volatile, the number is also subject to strong reviews, which can also trigger volatility in the forex board. Generally speaking, a high reading is seen as bullish. And for the US dollar, while a low reading is seen as bearish. Although previous months' reviews and the unemployment rate are very relevant as the headline figure, the market's reaction, therefore, depend on how the market assesses the data contained in the BLS report as a whole. So there's always a report that comes out, or what they call the NFP minutes. Usually they show like time impact, but what tends to show the long-term move. Now, to is something very peculiar here I was talking about. There is this non-farm payrolls, then there is this non-farm payrolls. They are both coming out at the same time. If you notice it carefully, right? They are both coming out at the same time, and they're catering for 2 months in a row. Now, this is something that you need to pay so much attention to. There are going to be 2 figures for NFP coming out, and they're catering for 2 months in a row. For the month of October and for the month of November. Both of them will be coming out today. And so that by January, we have our normal NFP routine. So it's going to be very, very tricky. So because of this kind of discrepancies, when you look at our signal center here, we have highlighted USDJPY as the main pair to focus on with a trade idea. Why is it done this way? Because when you see these kinds of discrepancies, usually we can easily see, I want you to mark the language, we can easily see double spikes or uncertainty, because we are most likely going to see different figures, right? We are most likely going to see different figures. And we notice on this particular non-farm payroll report, it has no forecast, because in September we had initially we had no figures. In October we initially had no non-farm payrolls, and the figures that came out cannot be how they are fully verified, right? Then you're going to find that it's now this month here, the November NFP report that has a forecast, because we did see that government opening somewhere into November or midway into November. That's why it has a forecast. But this one here of October has no forecast. But here's a previous, because in the last NFP report, we received the September NFP report. So this figure that comes out here would have worked as the previous on this. So I think you're seeing that difference in that too. So there's something that's a discrepancy between the non-farm payroll figure. So you have to be very, very careful going into these non-farm payrolls. When you look down into the assets with trade ideas, we have USDJPY, Euro USD, OD USD, GBP USD, USD CHF, USD CAD, NZD USD. Then of course we have the commodities, right? The commodities, for those of you that don't fear danger, we have in silver, gold, platinum, Brent crude. Then we have WTI crude, always takes as intermediaries. Some people call Brent crude as UK oil and WTI as US oil. Then we have USD Mexico. You guys, this one of those amazing pairs you need to look out for. USD Mexico and USDs they are amazing pairs. You can chip them in once in a while. Actually, there are 3 pairs: USD Mexico, USD CHF, and USDs these are rare exotic pairs that are very, very good actually, and you can always be able to pick up some nice trades within them. Then of course the alternative pairs here would be USD Chinese that I think no one ever trades, USD NOK, USD PLN. These are just rare pairs or assets you might want to look at. There's also a trade idea here in USD Mexico, as you can see. There's a sell limit entry around there. So we're going to pick up from these pairs what pairs we're going to look out for today, of course, plus the pairs you guys will put in the comment section that you would like me to look out for. That aside, I would like to look at a small article here on trading economics that are basically still talking about the dollar today morning. They had where was the headline? I wanted to look at the headline first because it helps us give us an insight onto where the macros are looking at. So dollar pressured ahead of the payrolls reports, right? So yeah, we can now go down and read the article slightly. It will be then go to our technicals as usual. So they're saying the dollar index hovered around 98.3 on Tuesday, remaining near the 2-month lows as investors positioned ahead of the combined October and November job reports. So once again, for clarity, there are two reports coming out today for November and for October. Both of them are coming out today, right? So I asked them that there's a bit of a discrepancy in the news events we're receiving today. So both the October and November reports are coming out today. November, of course, October was delayed by the government shutdown. Our retail sales data and preliminary manufacturing indicators are also due to later today. While the November consumer price index will be released on Thursday, the upcoming labor market data is expected to provide fresh insights into employment conditions, and in recent months could influence expectations for the Federal Reserve monetary policy next year. That Jerome Powell, of course, hinted we might definitely have one rate cut next year, which is very unlikely with the pressure we get from Trump and the fact that it's his last year in office. Markets are currently pricing in 75.6, possibly the Fed will keep rates unchanged in its January meeting. Traders also weighed declining odds that Kevin Hassett could replace Powell, following reports that President Trump's advisors are instead backing candidates perceived as more independent. Elsewhere, investors are preparing for a series of policy decisions from other major central banks this week, which is the Bank of Japan, the Bank of England, and then the European Commercial Bank. So anyway, they say that due to the combined NFP report coming out soon, investors are more pricing in a bit of a weak dollar earlier on, right? Which is a bit of pressure, why they're saying dollar pressure ahead of the NFP data report. So that's something you want to look out for as well. This is something I'm always going to talk about time and time again. I've mentioned this, I think, for months. Whenever we see some kind of breakthrough on the Russia-Ukraine peace deal, always expect oil to go lower. And I think about 2 months ago, I did say that the target price we're looking at is to push oil below 55 and definitely, or hopefully below 50. That's probably Trump's vision. And that's why he's pushing the Ukraine peace deal so much. But every time you see this, that means they're adding on to the world's global supply of oil. That basically means oil will be in plenty. Then the prices will definitely go lower. That's what it has to be. So when you look like trade US oil, I know it's a very loud pair, a very loud commodity to be traded. You want to look at things like the OPEC meetings and all these oil-related meetings and see, are they increasing supply? Are they decreasing supply? By how many gallons? By how many barrels? Then you want to look at the global tensions. How far is Ukraine and Russia? Because Russia is one of the world's biggest suppliers of oil. Then you can easily come in and now look for your bearish setups on US oil. Remember, this is just the perspective you're going to get. You're going to get what you call a world view. When you get the world view and the commodity or the currency pair, that's when now you go down and look for a bearish setup. Same way I advise trading the news, right? When the figure comes out, if you're not very comfortable, like for example today, we are seeing multiple news events coming out at the same time. We have a series of events coming out at the same time, and there is a bit of discrepancies between both of all the events coming out today. It's much more easier. Today is Tuesday, there are more opportunities. It's much easier to wait for a figure to come out. Of course, this is another forecast. This has no forecast. You wait for a figure to come out, then you know what it means for the dollar, and then now look for the best possible trades. But anyway, that is that from the macro side or the fundamental side. We can now get down onto our technical analysis and then definitely see what the markets have in store for us. In the meantime, of course, once again, shout out to Simon Gitonga for always being tuned in. Yeah, sometime next year, I think he will deserve a medal. A medal for Simon Gitonga. Is always tuned in. I don't think he's missed a day. That's from my perspective, but I don't think he's missed a day. Yeah, so a special shout out to you, Simon. Thanks for always being tuned in. Okay, so let me just get my MT5 up. Let me just get my MT5 up in a bit. Just 1 second. Of course, offset VL110. Are there classes at Truming Day? Yes, we have classes at 3 p.m. Feel free to make your way to the office, and we shall do have a class today as well. Okay, Joey Tech, good morning. Kindly JPY. All right, we have it on our ready on our watch list. We shall go through that as well. Brio FXK, good morning to you. How is your day? Are you ready for the non-farm payrolls today? All right, so this is the dollar index as usual. Always like starting with the dollar index. So yesterday we were very much anticipating price to push into the supply zone, then go to the downside And if you do remember, we had a support level we had marked out, and we had said in case price breaks below it, we shall look for a bit of bears. So that's support level from yesterday, around this level here. We hoped it would push price into this level. We look for sells. The alternative was that if price broke below it, we want price to push back in for retracement and then push down. So eventually price closes below, and then it comes and gives us a whole area of liquidity or a supply zone. And this was the supply zone we definitely had in. And you can see that retracement comes back into that zone. Then we are seeing that push back down when there's price action, right? So of course the targets here are going to be taking out these lows. That means we are looking at a bearish dollar until these lows are taken out in terms of intraday perspective, right? These are 4-hour time frame, so it's a very good target or a very good drawn liquidity. So it's why I was saying that price didn't quite get to our zone, but broke this support level here. Then you expect a push back into this breakout zone. Then our price can continue going to the downside. So that was from our perspective of yesterday and what we expected to happen. Just expect this continuation. Take out these lows. There are 2 lows here. Some people may want to call them relatively equal lows and then put there something like sell side liquidity. I think, your concept, your strategy, your terms, that's very, very okay. So this is the dollar index, and what you're looking at it. We're looking at a bearish dollar index. And what does this mean for dollar-related pairs? That means intraday, from a technical perspective, we're looking at a bullish GBP USD. The GBP just had news events, so we're going to look at a GBP USD and Euro USD. We see how those news events have affected them. Then you can break down, but by default, this one would look like JU buy, EU buy, USD JPY sell, USD CAD sell, USD Mexico sell, USD ZAR sell, USD CHF sell, something like that. So let's now drop down and look at GBP USD first. So the buys are initially there, right? So yesterday we had spoken of price coming into this zone here. Just have this marked out at the tip right over there. So the analysis from yesterday. Price came into this, gave us a good reaction to the downside. Remember, we had spoken of getting confirmations in a 5-minute time frame, right? So when price gets to this zone, let's just look at the 5-minute time frame. I told you my confirmation pattern is always just a shift pattern. So I look for my confirmations. When you come to a 5-minute here, we just need to look for a shift pattern, and this is how I tend to take my entries. For guys ask me how I take my confirmations. So price gets in, then give me a shift, comes here, forms this pattern right above here. So you can see this out clearly. I just want to zoom it in so that you guys can have a more practical example of what my confirmation pattern looks like. It's just a shift pattern. Once price is in my 30-minute zone, I'm looking for a 5-minute shift. So you can see this is the 5-minute shift. Price comes, gives me this high, gives me this low here, then gives me kind of like a higher high, then it comes and breaks below it, right? This is my shift pattern. So usually pairs like GBP USD, once I get this breakout, I'll just put there my sell limit. Sometimes I put in 50% of this push to the downside, but sometimes price won't get that back up there. But the best entry will always be that QM level, which is this. So you get your QM level entry there, stop loss above this. That's my QM pattern. That was my confirmation on GBP USD from yesterday's sell. Then you'd have a nice sell to the next 30-minute demand level. So this was GBP USD from yesterday, and the analysis we had from yesterday. So it was that push down. Price comes into this level here, fails to close below this support level here. So now looking at this price action, I'm still going to hold onto this zone up here. I'm still going to hold onto it. I'm going to just make it a little bit better because price really gave us the first sell from it. And I'm going to mark this supply level, right? I'm going to mark this supply level. So now because the dollar index is actually leaning more bearish, I have this obstacle here of a supply level. So I'll just keep the same markings and I'm going to look for the same exact thing. Like, it's just that's simple. That you do the same exact thing. If price does this, I won't take the trade. If it doesn't do it, I won't. Like, that's how consistency should look like. So the same exact perspective I'm going to have. I have my supply level nice and easy. Price is coming aggressively into it. The dollar index is showing me it's bearish, which means I would like price to break above this zone, right? And of course, if price gets in here and gives me a bearish shift, that means I can take some sell opportunities intraday, right? Because the market does not go in one direction. You can see this, the market came into the zone, the supply level, give us some sales to a demand, and now it's pushing to the upside. Same thing will happen. If I get a break above this, price will leave me a breakout zone. I'll wait for that retracement. I'll my 5-minute, look for a confirmation entry, push to the upside. This aggression is so much, so hopefully price closes above this zone. Then you can look for those buys to align our analysis together with the dollar index. When you look into this clear, you're going to that nice and easy up here. Price actually has a very nice imbalance. So one of the things people know about imbalances, some people call them fair value gaps, is that they focus so much on looking for entries within them, right? But usually price is looking for one thing, to create new highs or lows, or to come back and rebalance those inefficiencies. These are inefficiencies, the way you see them here. I won't say they're like multiple fair value gaps, but they are inefficiencies. These right here are inefficiencies, right? So price either coming down to form a lower low, I can see here it failed, closed above this low here, this area here. It failed to close below these lows. So it's coming back to do what? To fill up these inefficiencies, right? Then of course you can look for sell opportunities in some of those inefficiencies. Like you see here, price came back into the inefficiency and sold down to create a new low. It's coming back up, right? So if price violates this area, I want to trade price into this inefficiency. But if price gives me a confirmation into this area again, what do you see down here? We have a demand, we have some inefficiency being formed. Then one thing we're going to pay attention to is momentum, right? Because we have news in 7 minutes. That's what we're seeing, this bullish push to the upside. We have some news coming in from the pound side. So this is what you're looking at. Break above, push back below. Slightly, then we now have that push to the upside and see if we can have a bullish momentum. So of course, in filling this inefficiency, I don't like taking my trades from imbalances unless very many conditions are met. I believe for the guys who have been coming in for the classes, we've spoken about a number of these scenarios. We've spoken about the high momentum pushes into areas of interest, how we go about this, both aggressively and just in confirmation. And we've spoken about how best you can refine inefficiencies to look for entry areas. So this would be my ideal target area, or my second area I would look for sales from, right? So in case we are to remain bullish, price could still give me a push back into this demand here, as you can see, and then give me that push to the upside. That's also a very nice possibility. So I'm just marking out areas of interest. And what matters the most is what happens when price gets to this area of interest. That's what I'm thinking about. When price gets here, what happens next? What's it signaling to me? Is it giving me signs of buying or selling? If it comes into this zone, it's a 30-minute time frame. Can I get a confirmation on my 5-minute time frame? Same way that happened around here on that resistance there to give us those sells on GBP USD. So this is a general perspective on GBP USD. Those are my areas of interest as you see them. This one below, I'm not changing it, I'm leaving it there because price formed some kind of support level around this. So I'm not changing the one below we had from yesterday. This over here, I'll leave it still there as an area of interest. Then I'm going to focus more on the ones that will give me buy. Either price pushes down here to give me a buy, or price breaks out, retests to give me a buy, right? Then the selling opportunities I'll look at if they happen to cut intraday is when price breaks below this zone, I'll get a retest. It's a 30-minute time frame, so the range I'm having between this area and this area is good. I can pick up some trades. So either price breaks below, closes below this low, gives me a retest and pushes me to this demand level here, or price buys all the way into this supply and then gives me that 5-minute confirmation from which I can now sell to the downside. So that's what I've been thinking about throughout today's price action. Even when going to the non-farm payrolls, I'm going to be looking at that particularly. So this is our GBP USD and basically how I'm looking at it. So let's look at Euro USD as well. Let's look at Euro USD. All right, so this gives us very much bulls, very nice bullish confirmations. So now what do we see here? We had this resistance level as I marked out yesterday. We said when price breaks above, we expect a push back down. Then price gives us those bulls to the downside, to the upside, sorry. Then we're saying in case price closes below this, remember this range was very, very small from our price action yesterday. If price happened to come down and look for buys around this, but price did the latter, right? It chose to break the resistance level, breaks above the resistance. Now, when price breaks above the resistance, you're going to notice one thing. There's a demand level down here responsible for the break. Now, this is one of the biggest problems to us why people trade break and retest. Either tend to have a very big stop loss, or they tend to get stopped out a lot from experience. But this is what happens, right? When I see this and price gives me a breakout, if I'm having a resistance level and price gives me a breakout, I'm having a resistance, then price happens to give me this breakout. Price comes from the high, retracement, Then price comes and gives me a breakout, right? This is my breakout. This is my breakout I'm having. When price does this, I'm not going to want to buy from the retest level. No, I'm going to take this as now my area of liquidity, the way you see it, right? Now, why I take it like this? Sometimes I'll have an order block or a demand level inside here that was responsible for the breakout, not only the resistance, but also that structural high, because that was a high. It would have been a higher high, right? Now, this whole zone is where I'm going to look for areas of interest where price could possibly come back and then give me a confirmation to actually take my trading opportunities. And so what we are seeing with this, price gives me a nice breakout of this resistance. That means it leaves me an area of liquidity. This is my area of liquidity. When I look at the price actually leading towards the breakout, there is a demand level that price leaves for me right over here that leads to the breakout not only of the resistance but of that structure. So what price tends to then come back into this zone, and that's why you look for confirmations. Like I'm looking for the confirmation within this zone. It's my area of interest, right? So price comes back into that area there, and then we'll take 5-minute confirmations because we're using the 4H 30 minutes. Supposed to be 4H 30 minutes, and then 5 minutes for confirmation. So when I got my 5-minute time frame, once what price did was it able to offer us a confirmation. One more thing I always remind you, if price doesn't give you a confirmation, it's okay to actually let the trade be, right? So let the trade be. So here we have something called a round retest. Now these people are very patient. It's called a round retest, right? It's called a round retest. So what happens, that price comes, gives me my shift from here, but then it buys, gives me this whole retest before it comes out to my area. And with this, as long as price shifts, I'll always take either this level. Now, that's why I mentioned earlier that I don't really fancy or don't buy the idea of putting the entry at the 50% level of the zone or of the confirmation zone. I would rather just target the breakout. And I remember I said on pairs like this, pairs like GU, EU, because these are just very small pips. These are like 6.8 pips, very, very small. So the breakout area, once price closes above, I put my buy limit there. Then what happens? Price gives me a round retest. It's like it's taking a trip around the world to just retest the price level, then continue to the upside. So it's called a round retest. So that will have been the entry from Euro USD. So going into this price action, that's just a recap of what we looked at yesterday and how it played out. So we can now look into today's price action. Okay. Brayo, check out USDJPY. Lina Honjo GU, we did GU already earlier on as well. So looking at what's going on right now, price started to take out these highs. So it's the highest point price formed. We're anticipating that price will definitely take it out. The chart is blurry. Let me see. The chart is blurry. Let me try to see why the chart is behaving that way. Right, is clear. All right. So what we are focusing on now is for price to come and take out these highs, right? And come and take out those highs. Then you can look for a buying opportunity. Now, if the price failed to break below this level here, I'll still have it as a level, but I'm not going to pay much attention to it because now we have a new zone right over here. So that means look for selling opportunities. I'll focus more on price coming below this zone here. Then I can look for bearish opportunities to target this demand level here. But of course, take out this low and target this area here. So what we shall be looking at in this case scenario is first, what lower time frame areas are there that could support price to take out these highs, right? Then two will be conditional. Price breaks below, we have a retest, a push to the downside. Of course, with a 5-minute confirmation. So let's first see what would support the bulls if we were to take out those highs as we have anticipated. Okay, so this is my 30-minute time frame. So currently we have this demand, price comes high, low, gives me this sweep over here, starts pushing to the upside. So currently I have this demand level. I want to mark it by its wicks, I'll mark it just by its body. I have that demand level there. So basically the idea is that price comes back into this, then gives me a push to take out those highs. Then if I'm looking for selling opportunities, price should violate this area here. That's if I'm going to be looking for bearish opportunities. I'll expect price to violate that area, give me a push back into a supply level, and then definitely a 5-minute confirmation then I can look for sales. But for now, I'm going to lean more on bulls because of what the dollar index also gave us. So this is so much high volatility. A gap down on a 5-minute time frame. So you could refine this a little bit. Refine this to this area here. This looks like a significant area that price may want to come down and take out. So basically, I'll still have the perspective on Euro USD. Alternatively, what will happen is, I'll need price to actually just break above this area here. Break above that area to what I'll be looking out for in Euro USD. Okay. Kezia, good morning to you. Nina Mohonja, when do you use 5-minute confirmation and what confirmations do you want to see? So as I said earlier on, the confirmation I want to see is a shift pattern. Basically, it's after getting my general market structure in a 4-hour time frame, I look for my areas of interest that price can either respect or violate on the 30-minute time frame. Then I'll take my confirmations on a 5-minute, and for now my confirmation is a shift pattern. If this is my demand level on the 30-minute, I'm going to want price or the 5-minute to come in, give me this kind of structure. It's kind of like a head and pattern, head and shoulder, but we call this a quasi model or the QM, right? Sorry, this is kind of like a QM, but I want price to give me this shift here, right? So it's called a quasi model. It offers me a shift. Then I like taking my entries, usually at the breakout, sometimes at this QM level, this level here. So it's the shift pattern. I want to say shift pattern in simple terms. That's what I look for, and I'm looking for it inside my supply and demand levels that I get from the 30-minute time frame. I hope that answers your question at Lina Mohonja. I hope that answers your question. Limo QV, okay, it's good now. Okay, sorry for that. I think we're having some bit of technical issues, but we are back now. So that's Euro USD. Then we can now move on a bit to USD JPY. I think someone did request for USD JPY. Oh wow, so USD JPY has been a tricky one. Okay, so where this resistance price breaks out, comes back with high momentum, back to these levels here. We have this demand level. Remember, we have this general level here that's still holding price to be a bit bullish. So here we had this demand level. Price comes aggressively through it. This way you want to take confirmations to avoid this kind of movements. And remember, when price breaks below, you now have a zone, as we mentioned earlier, right? We now have a zone. What supply level is available in the zone? This one exactly, right? There are 2 1 above, but this one that's immediately at the breakout level, respond for the breakout. So this is a demand level I'm going to take as my area of interest as well. This is on the structure basically. So I'm going to go on the 30-minute time frame and now look for areas of interest inside there. So you can be able to refine this. Should you refine it? There is no clean demand levels, supply levels, sorry, that you can take up. Price comes back with high momentum. So what can we do within this? Wait for a 5-minute shift. But even a 30-minute shift in this case scenario will give you an entry. But you'll have to be patient and very, very patient for that. You see that? We have that area there. So price comes and does this, gives me a high. Allow me first change up this color so that I can elaborate this a bit in depth. So price comes, gives us a high, gives us a low, right? Then gives us a higher high. So then price comes down, gives us a low. Then we see that this is the level where I want to put our entries, the QM level. This is the QM level where I want to put our entries. And what happens? Price comes back after that shift and then taps our entry and sells to the downside. So that's how the confirmation pattern looks like. Though prefer to do this on a 5-minute time frame once I have a 30-minute zone, 30-minute demand or supply level, right? That's what I tend to want to look out for. So let's use JPY. So let's look at the 4-hour time frame and see what it has in store for us. So as I mentioned earlier on, as I mentioned earlier on, when we're looking at the dollar index analysis, we say that If it's bullish, we expect this to give us a bit of bearish pressure, and you can see that coming into this area here. So remember, within this whole zone is a bullish zone from a higher time frame. Remember, there's a weekly time frame where we had this whole bullish zone. So we're going to just refine it to what areas price could possibly be targeting within this. So another area I like to watch out for called long wick rejections or rejection areas. Areas where price gives us relatively long wicks, areas like this. So that area is a possible target for price to go to if it's to sell. Why am I not paying attention to the current area here? It's because we haven't had a confirmed breakout yet. Now, this is something I'll always mention. I only look for my trades after a confirmed break of structure to the downside. When you look at this low here, when you look at this low, price has been rejecting this low as of demoing. So until price closes below this, I won't take this as a bearish area of interest. So I just need price to give me that closure below that low. Then I can now take that zone as a bearish zone. We're going to look at gold, what happened yesterday. If you remember carefully, for the guys who are in, you can go back and rewatch that episode. I said if that 1 hour didn't close above, we are going for a deep retracement to the downside. And that's exactly what happened. The 1 hour candle failed to close above the previous 1 hour high. And sometimes if price does that, it's going for very, very deep retracements. You just want to be skeptical. It's kind of price action. You keep it in your mind. Like, these are things you will just see. You don't need to practice them. You understand them. You know that, okay, if I see this, price was not going to do this. And you just see them happening a lot of times. So this is the perspective. I've choose this area to be bearish. I'll need price to close below this low here. Otherwise, price can as well come into the imbalance. I don't trade imbalances like that. But price can come all the way to the supply level, to the upside. Then I can look for some bears into that. But alternatively, the goal is to see price break below, come into this demand level here, or that rejection level there, and probably look for some bit of buying opportunity. That's something I would want to look out for. And in today's price action, basically because the dollar index is showing us bears, right? So when price closes below that low there with a blue line, I'll wait for the pushback in, then look for some selling opportunities. If it doesn't do that, I'll wait for that zone all the way up there. So that I want to just be looking out for USDJPY. After the shift pattern, do you still need to see candlestick pattern confidence? And now the shift pattern is my confirmation. At that point, what have I done? I focus on aligning 3 time frames. It's important I need 3 time frames to speak the same language. If I get a 4-hour bullish structure, I get a 30-minute bullish area of interest. Could be a demand, could be an order block, could be a fair value gap. Then on the 5-minute, I know for one thing for sure, like just based off logic. If this is my 4-hour zone, right, and the market has come back into my 4-hour zone, whether I want it or not, the 5-minute time frame will show me bullish signs before the 4-hour ever does. It's going to take 4 hours for this candle to close, but the 5-minute is going to give me some kind of price action. Now, if the 5-minute is giving me that kind of price action, I'm going to ask myself, can't I go the 5-minute and have some kind of structure to identify the bulls? That's why I do that. So I have aligned 3 structures and 3 time frames. Then I'm just using logic. So with my shift pattern, I don't add anything else to it. In terms of that, I don't wait for candlestick pattern confirmations. But what I tend to add on once in a while is the RSI. It's the RSI. And why do I do the RSI? If price is coming down, it's in a downtrend, right? Now that RSI tends to give what they call hidden shifts. That's what I look for. Many people say that the RSI should be able to, how do I call it, predict when the market's going to reverse. Well, I use it the other way around. I use the RSI to confirm if a trend has reversed or not. That's what I use the RSI for. But I make sure I'm using it inside a high time frame area of interest, and I'm looking for an RSI divergence in a lower time frame. So I'll be looking at the structure of the RSI other than the actual market. I think I did take a gold buy. I took a 3-minute gold buy yesterday evening based off the RSI confirmation. I don't know if I'll have time to go through it, but shall see. All right, so we can now move on, I think, to gold. Oh, okay. We can move on to gold from here and see. So yesterday we had this 1 hour perspective. and was seeing if price would be able to close above this high. And I say, sorry, was that the high was inside here, not the all time high, not the general high. Sorry. So the high we're looking at on gold yesterday. This high here, right? So we said if price closes above, then we can target this area here, right? Wanted a closure above, a retracement, and a push up. But so price it failed to close above those highs. And I said if price fails to do that, it's going to give us deep retracements, right? So what happens is we're at the demand level here, that price came in aggressive. Now, if price comes in aggressively, it's not going to offer you what? It's not going to offer you confirmation. It never does with high momentum trades. With high momentum, up pushes. So price definitely takes out that demand level, so it gets null and void. If you go to a 30-minute time frame, I think it's a 4-hour time frame. Okay, if you go to a 15-minute time frame, because on a 1-hour time frame, you're going to see that price does something, gives me a break and a retest into a supply zone. But usually the supply zones, sometimes they won't give you confirmation, so I don't really take much of them. But then it had a nice entry for a break and retest around this. I'm not retesting a support level, it's retesting this supply. You see that? This light blue here was our demand level. Price comes and violates it aggressively, leaves us a supply level right before it does what? Right before it pushes down. Guys who do classic supply and demand, you call this a drop-based drop, right? It's a drop-based drop. Then price retests that base area, pushes lower. So this was the area that price comes back to retest. And then you would have taken a 3-minute confirmation, because now, unlike earlier on, this time we are using the 1 hour, the 15 and the 3-minute. That's what we are aligning. So what I did in this case scenario for my gold trade was to wait for price to give me a new zone, because I wasn't very confident with this. So price gives me a new supply, tries to go all the way down. And after giving me a new supply, that's when now I come in and wait for these confirmations that happen on this time frame. So this was, let me just first mark this straight. Then we can go to our 3-minute time frame. So once again, my entry is always a shift pattern. So as you can see, price comes into this area here. Now you see, it's all about the patience, right? It's all about patience. Price comes into my supply zone, gives me this high. Now price only shifts after it closes below this low. If you can see that, that's where my shift occurs from. Now what do I have to wait for? I have to wait for a retracement back, and this was my entry, and I kept my stop loss mode right above that area there. It was a bit slightly large, but for the risk to reward ratio in these trades, I mean, it always just makes sense for the risk to reward ratio. Because I have a 1 to 4 risk to reward ratio on this trade. I had 1 to 4.7 around that on this particular sale. I want for about 1 to 4.7 was the risk reward on this. So this was the take profit level, the entry, and the stop loss. So that's the perspective we had on that side. We had marked out those 3 alternatives as well. Price breaks below sales, the downside goes had a good range. So from here, we can now look at what the market is most likely going to do through this price action. So let's look at what zones are basically. So when you look carefully here, our price had given us this breakout to the upside, then later came and swept right, trying to come into this imbalance. Now look at this price action. What did we anticipate? We have seen a very aggressive push to the downside. We don't want to fight the momentum. Now we have this as our new low formed around there. So the goal would either be going down to take out that new low there, or going to sweep it. When I say sweep, it means price will come wick below that low and fail to buy. To just the same way they did with this previous example here. My stress. The example is just here. This price comes, wicks below, then tries to push to the upside. Now, price coming to one of the two things: either come and close below this area, come and close below this, or come and wick below it, then push to the upside. So it's basically what I'm looking out for on my gold. So I'll be looking for a bit of bears most of the day. So looking at my 30-minute time frame, we do have this kind of price action here after price took out this take profit level. So what I'm going to do with that price action is remember we're trading either into imbalances or to form new structure points. So when I have that analogy or that ideology in my mind or that logic, I'm going to come and look at what area here acts as a strong resistance. This is a strong resistance area. So if price breaks above and retests, what do I say above this? I have an inefficiency that price likes to trade into or likes trading to fill up these inefficiencies. So with that in mind, if price happens to break above, now I'm looking for buy trades because of ABC, because I have the reasons, I have the narrative. Actually, I have that perspective on that particular currency pair. When I look at now going below, when I look at the target below here, right now as I speak, you don't really have any significant, because we have one significant structure, but it's not the best example. We have this supply level, but then you realize that the supply level didn't push price that far down, needed to push price below this area, so it will be a very valid zone, right? So it's only after a break below that you want to look for trades, but when I look at the range within that, it's not really something that personally, on a personal level, of course, I don't think it's something that will fit my risk appetite. If these are 80 pips, I probably will get like 30 pips or 40 pips out of it as my target. It's not something to my liking when I'm trading gold. I want to feel gold, you feel its weight. Trust me, then it makes more sense. So I want to have a good range, catch like 200 pips, because then a range of about 200 pips, sorry, because then you can still catch 100 pips easily, right? If a range is 200 pips, you can't fail to catch 100 pips easily. It becomes a bit much more easier that way there. And this is as far as the USD. There's a request in for CAD JPY. Yes, so we're going to end with CAD JPY and see how the market goes. So analysis in CAD JPY is still on. I'm not really changing my analysis much from this on CAD JPY. I'm still watching for this and just see how it plays out. It's not 30-minute time frame. Our 4 hour is still pushing lower, which is quite okay. Yes, so CAD JPY, I'm sticking to this analysis or to this personal setup, unless otherwise. I'm not really changing my bias on CAD JPY. I'm sticking more to this. So that's my perspective on CAD JPY. I'm not changing it. I'm just waiting to see how it goes. Either price violates and I get a new setup, or I stick to it and take that trade when price gets to the zones and gives me the right confirmation. How many confluences do you look up to before you enter a trade? So let me see. So I aligned 3 time frames, and then I get an area of interest on the 2nd time frame, then get the confirmation pattern in the 3rd time frame. So I don't know all the confluences, but there are 3 time confluences, 2 structure confluences. But they all work hand in hand. I always need to have all of them, all the 5. I don't know if they're confluences or not, but it's 3 time frames, area of interest, confirmation. So I think these should be my confluences: time, structure, confirmation. Smart money reverse is my confirmation, the one I prefer to have. So guys, I'd like to wish you guys an amazing day ahead of the non-farm payrolls. Remember, we have both the September and October non-farm payrolls coming out today. So you have to be very careful when you're taking up those trade opportunities. Make sure you manage your risks and make sure you're able to preserve that capital for tomorrow for a better opportunity than what may happen in the markets when you have discrepancies. Other than that, don't forget to create your FXPesa account right now or after this live with a link in the description, and as well take advantage of the career bonus as we go into the festives. You want to go with an account that looks bigger than it actually is. So the best way to do that is to have or activate your career bonus. Before you go, I have a question. You should have just asked the question, Charles. Before we go, we have a few minutes, okay? Or check your USD after analysis, check it. Oh, it has already come back to trigger the area. Nice. because the US is already come back into this demand zone, trigger that area, guys that go aggressively. Find a QM, that's quite okay. Wanted to push to the upside. It's a very, very nice question coming in from Charles. You really motivate me in this trading. Is it a must focus on both fundamentals and technicals, or can I just do technicals? It's not a must focus on fundamentals. It's important to be aware about fundamentals, right? You can decide and do like, well, the NFP I want to trade, right? And then you know that if the NFP comes out this way, it means bullish or bearish for the dollar. I'll tell you that's essential for me. I'll tell you it's essential, but you don't need fundamentals to actually be profitable in trading. Technicals alone are enough, but you have to be aware about fundamentals. Not good at them, aware, just aware. Then you can stay out of the news events. That's something you can do. It's not a must to fundamentals, but you can do it. So I did fundamentals to supplement my edge in trading because I'm a swing trader. So I did fundamentals. When I hold a gold buy, I want to do everything that's going to affect it because the banks run and governments and policies. It's what runs the market. So the market reacts to both short term and long term. So I want to, when I'm going to hold a trade for 2 weeks, 3 weeks, for a month, for me it's essential to the way I want to trade, not to my technical analysis. So technical analysis alone is good enough for you to actually be profitable and be a very, very good trader. So it's not a must, Charles. I hope that answers your question. Other than that, I would like to thank you guys for tuning in. Don't forget, for my sessions, you can always engage. Feel free, feel at home. Engage, share your ideas and everything. And don't forget to sign up for our classes. We have physical classes for you guys respectively. And we also do have online classes that cater for everyone. If you know people who are beginners out there and they need to get started with their trading career, and the classes are free, very, very important. Just tell them to come at the YouTube channel, check in the description, sign up to the classes they feel they're comfortable with, the beginner class or the intermediate class, and we'll be happy to take them through to get them onto this journey. If you also want to improve on your trading strategies, your concepts, feel free to engage into our 11 a.m. class or the intermediate class. Other than that, I wish you guys an amazing NFP day. I hope you guys have a profitable day. And I hope you have an amazing week ahead, right? And stay blessed. Cheers.